This is the subcommittee on audit of the chair of the Committee of Fiscal Affairs. First of all, I'd like to thank everyone for braving the elements and start off with asking the University Controller, Barry Kaufman, if you would introduce the audit team from KPMG, and I understand they have a report on the audit, and I see no reason to delay just getting into that.
Thank you. Let me also introduce some members of my staff that some of whom may be new to members of the committee. To my left is Miriam Katowitz, who joined us a few months ago as the Deputy Controller, position that we've been searching for quite some time, and we're glad to have Miriam with us. To Miriam's left is Tom Zhao, who is the University Assistant Controller, and Tom has been a person that's been instrumental in developing the financial statements that KPMG gets to audit. And then to Tom's left is the KPMG team, and that is Shelley Massey. Shelley is the partner in charge of the engagement. To Shelley's left is Irene Crasto, who is a senior manager working on the engagement, and to Irene's left is Lou Messina, who several of you know from previous engagements. Lou is the National Industry Director for Higher Education, and I think last meeting of the Audit Subcommittee as well. Thank you. Shelley?
Okay. Hello. Just further introduction for Irene. I don't know if she's attended any meetings before, but I know that you're used to seeing Erin Shambari, who is still part of the team, but just had a baby girl last week, so she's taking some time off. Irene had been the senior on the account for, I think, the last 3 years, and she was promoted to manager last summer, and assisted Erin this year on the engagement, and she will continue as well, so I asked her to join us today.
Did I promote her to senior manager?
You did, sorry.
It's okay with me.
It's okay.
Next year.
Okay, so the presentation for the audit results, the financial statements have also been provided, as well as the management letter. So I will begin with the presentation, jump in and ask any questions as I go through it. On page 1, we have the agenda items. There have been 2 financial statements that have been issued to date. The first is the combined financial statements that include all of the blended component units and the discretely presented component units of the university. That is what you have been provided. We also do issue a university just for senior colleges report, which is for the purposes of the state, because the senior colleges are a component unit of the state, and they ask that we separately provide an opinion on just the senior college activity. The senior college activity, if you're interested, is included in the back of this report. There are schedules that break out senior college and community college, so you can see the differences. And the senior college column is what we're opining on in this other report.
Just a quick question on is that the statement you just made, would that be the reason for the footnote regarding Macaulay Honors College? There's a footnote regarding the reporting on Macaulay Honors College.
In this report?
I think it was, yeah.
Okay.
Yeah.
That one, is that the blended versus discrete?
Yes.
Okay, I will get to that, but yeah, that's something that I will speak about in just a few minutes. Okay, so I'll hopefully answer that question. There were also a management letter that includes one significant deficiency that we'll speak about today. The second agenda item under management letter is the bigger book, the communication of internal control items that's addressed to Barry's attention. We thought we were going to have that ready for today, but it's not. So we're going to defer the discussion on that management letter to the February meeting, hopefully, that we're going to have, where we're going to discuss the results of the A133. So the last few slides we're not going to go through. Okay, so beginning with our required communications, we do conduct the audit in accordance with auditing standards that are generally accepted in the United States of America and the standards applicable to financial audits that are contained in government auditing standards. And again, government auditing standards is required because we do issue a separate report on the A133, which is the university's federal programs, and the financial statements are included in that report. We have issued an unqualified opinion on the financial statements, and there are 2 explanatory paragraphs included in the opinion, and one of these matters is relating to the Macaulay Honors. The first is an explanatory paragraph about a new GASB standard that was adopted by the university this year, GASB Statement Number 53, recording derivative instruments, and I will speak separately on that matter later in the presentation. The second explanatory paragraph speaks about the change in the university's reporting entity. So there was one blended component unit, Macaulay Honors College, that was previously met the definition of blended, so it was within the results and the operations of the university. However, they changed their board structure during the year and now meets the definition of a discretely presented component unit. Essentially, the board became more independent, and the university didn't have as much control over that entity as it had previously had. As a result of it becoming a discretely presented component unit, it's no longer presented in the column with the university's assets and liabilities. It's presented with all of the other foundations. As a result, we did restate opening net assets of the university to pull out that component unit, and now it's presented with all the other foundations.
That implies that there's real governance there then?
Yes, independent
Independent
governance.
governance.
That's correct.
Yeah, there's another issue here, too, that we gave the Macaulay Honors College degree granting authority, which it did not have before, and that presented it had a very different status now than it did. So those are the 2 basic driving forces.
So then as a result of that, there are footnotes included as well that show that the opening net assets of the university are pulling out that foundation, and then there's another footnote in the foundation section of the report that shows it being added in. Is that what you were referring to? Okay. Okay. Something else that is mentioned in our opinion with respect to the university's discretely presented component unit, so all of the foundations, we do not audit those foundations. They are audited by other independent auditors. We rely on the opinion of those other independent auditors when we present the financials. We do certain due diligence procedures over those independent auditors, so we do check to make sure that they have no complaints filed against them. We do confirm their independence because while they are opining on the foundations, they do need to be independent with the university. And lastly, we do review the financial statements for reasonableness. So this is a top review. We look to make sure there's no glaring errors in there. And as a result of that, we do actually have some audit differences that we propose at the foundation materiality level when we do find errors in their financial statements. And we will discuss those in detail later in the presentation. Okay, any questions so far? Okay. We do plan and perform the audit to obtain reasonable but not absolute assurance that the financial statements are free from material misstatement. And we do consider internal control when we determine our audit procedures. So we perform internal control test work over tuition billings, cash collections, salaries, procurement, all of the areas where the significant transactions flow through on the university's financial statements. Based on the results of the internal control test work, we're able to, if everything's operating as it had intended, we're able to reduce our substantive procedures. If there's any areas that had control exceptions where we feel that we need to do more substantive procedures to get comfortable in that area, we would do that. But we do not provide enough procedures. We don't do enough over internal controls to be able to provide an opinion on internal controls as they do in the public environment. With respect to the timing of the audit, the interim procedures are performed in May through August. Essentially during that time, we are visiting all of the colleges and we are performing our internal control test work over all of these transactions then. And then we return in September through early November this year to perform the procedures at the central office. Okay. On page 3, we have two new accounting standards that were adopted during the year. The second one I have already mentioned briefly, but the first one is GASB Statement 51, which is accounting and financial reporting for intangible assets. And as a result of this, the university recognized $5.6 million of intangible capital assets within the university's financial statements this year. $3.8 million is relating to internally generated software with the implementation of PeopleSoft, and $1.8 million was internally generated copyrights. Most of this is salary-related expenditures that are now able to be capitalized on the balance sheet. This statement was implemented prospectively, so it only included things that had been expended during the year. We did not have to go back and look to see what had happened previous to July 1st, 2009, because the standard said that if it was internally generated, you only had to do it July 1st going forward prospectively. If anything of a material nature had been purchased by the university in prior years, you would have had to go back 20 years and accumulate all that data and record it. But there was nothing of a material nature that was purchased. The second GASB statement.
That wasn't a reclassification, right? Of existing assets, that's the IP and the IT were,
That was new expenditures
So-
this year.
right.
Yes. Okay. The next accounting standard that was implemented is GASB Statement Number 53, Accounting and Financial Reporting for Derivative Instruments. So previously, there was a GASB technical bulletin that had been requiring disclosure on derivative instruments, and in the case of the university, we're talking about swaps. So there are about, I think, 46 swaps that the university has in connection with its debt, with its DASNY debt. So previously, and this, I think since 2003, the university has been disclosing all of the requirements relating to these swaps, including the fair value. So that had been assessed, it just had been disclosed, never reported on the university's balance sheet. So similarly to what FASB organizations did 5-7 years ago, now GASB Statement 53 is requiring the state and local governments and their entities to, for the first time, record derivative instruments, the fair value, on the balance sheet. This is, if you're familiar at all with how the FASBs put it on their balance sheet and put the change in, it is a very different process. The derivatives are assessed for effectiveness, and they were all assessed this year as effective. And the importance of a GASB entity having effective swaps means that nothing is flowing through the statement of changes. It is only a balance sheet transaction. So if you have swaps that are in a positive fair value position, they're recorded as an asset. The same exact dollar value is recorded as a liability called deferred inflows. Essentially what that means is that if everything's going to be effective from the point in time that you enter into the agreement to the termination date, by the termination date, everything will be zeroed out. Similarly, if you have effective fair value swaps that are in a negative position, they will be recorded as a liability with a corresponding asset. The university had $4.2 million of swaps in an asset position and $76.1 million in a liability position. But since everything was effective, it's just a balance sheet transaction only. The swaps are assessed for effectiveness every year. As long as they remain effective, this will always remain a balance sheet only transaction. Once it becomes ineffective, then the change in the fair value each year will be recorded in your statement of changes through investment income or loss. And this is different in the GASB world compared to the FASB world, but once something is assessed as ineffective, it will remain ineffective for the remaining life of the swap. So the difference in the FASB world is it's assessed every year, and depending on where it falls, it could change the presentation.
Ms. Massey, Professor Martell has a question.
Okay.
So it's binary in GASB. It's either effective or not. There's no ineffectiveness going through other comprehensive income.
Exactly. Yes, that is one of the main differences between the FASBs and the GASBs. It's either all effective or ineffective.
Interesting. You get to that, so if there's a basis change, you just ignore it.
Well, it's part of, the effective calculation.
But once it's deemed effective for the year,
Ineffective?
once it's deemed effective, basis changes don't
Right.
move through the system. All right. When we get to discuss that more often, I've got, this, you're going to come back to this, or you want to, this is not really a question for you, it's really a question for the internal team. I understand the pay fixed, receive floating. I don't understand the pay floating, receive fixed. I mean, I understand why we have the 60, I don't know, well, wherever it is, it's in footnote.
What is the question, Professor?
He just wants to know the difference between the pay variable, receive fix, and the receive fix.
We've got 69.6 million of pay fixed, receive floating, and we've got 4.23 receive fixed, receive floating, and pay fixed.
Yeah.
So,
Probably variable versus.
Right.
Yeah, well,
That's
the first-
exactly
the
right.
first
You're
one's
swapping
variable
fixed to
against-
variable instead of variable to fixed.
It's,
but why would you have both sides of the swap? Why would you have some pay fixed, receive floating, and some receive floating and pay fixed? Well, I understand the receive floating and pay fixed. I don't understand I don't understand the smaller of the two of them.
it's to mitigate some of the risk. Certainly, when you have the pay fixed, receive variable, you're hedging yourself in one way.
Right.
But what if you're wrong? So there's a small amount of built-in security by hedging the other way. And you also notice that the other swap is actually future starting. So we were very fortunate that DASI entered into these swaps because the way that interest rate went against swaps, you'll notice that the 69 million is in the negative.
Right.
And the 4.2 million is actually in the positive.
Right.
So it was a hedge against the 69 million. It's not a hedge against the 69 million as much as it was a hedge against the other type of derivative instrument that was entered into by DASNY. And it's future starting actually in September. If you look at the footnote, also in September of this 2010, DASNY actually got out. The state is trying to get away from a lot of the pay fixed, receive variable swaps because they're losing a lot of money on it. But the other type of swap, actually, when DASNY got out of it, DASNY actually recouped about $12 million in gains from getting out of that, terminating that swap in particular. So it was just an offset hedge, basically.
All right, thank you.
Thank you.
Any questions on 53, the implementation, the impact on the financials? I know I said a lot of stuff there. Okay. On the next page, we have significant unusual transactions, which we did not note any for this year. And we have management's judgments and accounting estimates. So these are areas that we do focus on during the course of our audit. And the most significant ones are included here. The first is the classification of the components of net assets. So net assets is the equity of the organization, and in a GASB entity, there are 3 different types of equity. There are invested in capital assets, net of your related debt. There's unrestricted, those that are free and clear for you to use as you choose. And there are restricted, those that are expendable for certain purposes, so loans and capital assets, and those that are non-expendable. The non-expendable would be endowments. So during the course of our audit, we do, for net assets, we look at reconciliations to see how these are being computed through the assets and the liabilities. We also do look at if there's any significant donor or grantor agreements that pose a restriction. We do look at those as well. The next item is current versus non-current classifications of assets and liabilities. So all GASB entities are required to show a classified balance sheet. So the assets and the liabilities are broken out between current and non-current classifications. So principally, we look at the classifications for debt, investments, receivables, and compensated absences. Those are the largest of the balances that have both a current and a non-current portion. And we look to ensure that what's being classified as current will be either paid or collected within 1 year. The next item is the presentation of scholarship allowance and expense. This is your discount, what you're providing the students to attend the institution. The way that this is presented, it could be presented as either a net revenue item, that's the allowance, or as an expense. Depends on what the student is being given the money for. And we do look at the calculation and what is being put into the allowance and the expense components for management. The next item are the allowances for doubtful accounts and loans. This is something that we look at on a college-by-college basis. So we look at the amount of reserves that they have relating to their student accounts and loans receivable. And we look at the policy. Not every school is exactly the same, but essentially they look at like a 3-year average of historical write-offs, to ensure that they have an appropriate reserve. And lastly is the valuation of investments. So there are marketable investments and there are non-marketable investments. And there's another slide that I have that will go through some of the procedures of evaluation of investments. So I'll hold off on that. Any questions? Okay. Okay. All right. The next page includes the audit adjustments that were identified. The first two are university related. The last two are foundation related. As I mentioned, even though the discretely presented component units are not audited by us, they are included in our opinion. And we do set a materiality threshold for the foundations when we do our review. It is at a much lower level. They're smaller organizations. The first two relate to the university, and the first one specifically relates to CUCF. They had a restatement this year. They had identified, management had identified a receivable from the city of New York that was deemed to be uncollectible, and it was something that should have been written off in prior years. So it was material to them. Their auditors provided a restatement. However, $5 million to the university was not considered material, so management recorded that $5 million of bad debt expense this year in 2010.
Just out of curiosity, what
It's tuition. It's tuition. CUCF thought they had overpaid the city in one of the years, the tuition revenue that we sent to the city, and the city said that was not the case. The CUCF finally went in and did the analysis and the documentation and agreed that they were not owed that money. We did not overpay.
No. CUCF.
Had recorded the
CUCF
receivable.
thought there was an
Over-recorded the
overpayment.
receivable.
There was no overpayment.
Okay, the second item also relates to something that should have been recorded differently in 2009 that the university corrected in 2010, and relates to some activity that was provided by DASNY. There was a project that DASNY had said should be expensed. It was expensed by the university last year. In further review this year, management of the university determined that it really should have been capitalized. So that was corrected this year as well. Those two actually offset each other with a net impact of $5 million.
What is our definition of materiality is for CUNY?
Materiality is obviously professional judgment. Don't know the exact number. I know we had this conversation last year.
Right.
Materiality is something that is considered throughout the entire audit, and as we focus on different levels, materiality actually goes down. So when we plan the audit and determine what our significant audit areas are, materiality is at a much higher level. By the time we drill down and look at audit adjustments, the materiality is obviously a much smaller number. I can safely say that $5 million is not considered material for the university.
A little bit like obscenity, you know it when you see it, I guess is the,
But if my experience is worth anything, typically the audit committee has some idea of the process by which that number is generated, if not the number itself.
Well, the process starts, you're not a for-profit, so it's not driven off of your net earnings or net loss as it is in the public companies. It's generally derived off of either total assets or total revenues or total expenses. It's derived off some gross basis. So that's where the process starts.
We'll ask the question again next year.
but it really, I mean, the answer is that it really is a qualitative as well as quantitative assessment.
The foundation-related differences, again, as I mentioned, we do review the financial statements of all the foundations, and in the past, we have always seen these reclasses that these auditors like to, reclass between permanently restricted and temporarily restricted, and really the right answer is, if it was an error, they should not be just reclassifying balances, they should be restated. We saw in 3 foundations that they had these reclasses that we considered to be errors that amounted to $2.5 million. The 3 foundations that were impacted were the Baruch Fund, BMCC Foundation, and Medgar Evers College Foundation. And again, $2.5 million was the sum of all of the reclasses. There was one foundation that did actually have a true restatement. So they had corrected their balance sheet for their net assets. But we don't generally show the restatement through the foundations if it's immaterial. So the university just put it through the current year activity. And that one was for the Macaulay Honors College Foundation in the amount of $1 million. Any questions? Okay. Page 6 includes our other required communications. We do have a responsibility to review information in documents that contain the audited financial statements and the independent auditor's report. Currently, there is nothing that we review. There were no disagreements with management. We received everything, and we had full cooperation from management. There were no known consultation by management with other accountants, no major issues discussed with management prior to our retention, absolutely no difficulties encountered in performing the audit, and there were no significant changes to the planned audit scope that we presented to you, to this committee, back in the fall. There are 3 pieces of significant written communication between us and management, and they're included here: the engagement letter, the management representation letter, and the management letters that we issued. And lastly, we are considered to be independent with the university. This is something that KPMG monitors on a regular and frequent basis. And there were no management advisory services performed by us during 2010. The next slide includes our consideration of fraud in a financial statement audit. There is an auditing standard, SAS 99, that requires auditors to consider the risk of fraud in all financial statement audits. So this consideration is something that occurs during our entire audit process. So during planning, we speak amongst our team and with inquiries with management on the potential risk for fraud. We do perform, internal control test work on controls that mitigate the risk of fraud. And there are also 2 substantive procedures that the auditing standard requires us to look at. And the first relates to misstatement relating to revenue recognition. So there's 2 areas that we look at here. We look at cutoff for tuition revenue, and we look at some transactions that occurred around June 30th. So we look at transactions that occurred before and after, and depending on what they're paying the money for tuition, if it was, a spring 2010 receipt, obviously it goes in June 30th, 2010. If it's for the fall, we know it should be deferred. We also do look at cutoff for appropriations as well. And we had no exceptions in that test work. And the second is the risk of management override of internal controls. In this area, we do look at journal entries These are areas where management, may have the ability, to do something inaccurate. We sample journal entries, we look to make sure they've been properly approved, there's segregation of duties, and there's appropriate support. Again, I mentioned the significant accounting estimates. Again, this is an area where management does have some judgment, and we do look to make sure there's no management bias when they're developing their estimates. And if there were any significant unusual transactions, we would be looking very closely at those as well.
Question?
Yep.
We're in the process of moving from, we have some stuff on our current systems. We have the chart of accounts on CUNY First. So we've got different systems operating. In your review of particularly the second item, did you see any issues that the audit committee should be aware of with regard to the intermediate phase we find ourselves in?
No, and how the university, implemented phase one, of the PeopleSoft system in the general ledger package, and then bringing on modules, as years progress is a very common way. Not everything can be implemented all at once.
Right.
But we also do have an IT audit that looks at the PeopleSoft system and looks at anything, that is integrated with that system. If there's anything from the FAS system that we're selecting sample items from, and, we do look to reconcile, making sure that from that system, reconciles to what's actually being recorded in PeopleSoft.
Thank
So
you.
we're comfortable with that.
And another question, if you go up to pervasive risks, the second bullet, KPMG maintained an overall heightened sense of awareness. Is the heightened boilerplate, or is the heightened an adjective that we should understand?
No, that's more of a boilerplate in
Thank you.
literature. On page 9 are the procedures over the valuation of investments that I had mentioned previously. This is an area where we do one set of test work over the valuation of marketable, and we really do something completely different for the non-marketable funds. Anything that's marketable, we have the ability to utilize a third-party pricing service to provide us with, independent quotes, and they're compared against what your custodian is using. And if any differences fall out from there, we further investigate with management. For the non-marketable alternative investment funds, there were approximately $72 million of the university's investments in non-marketable funds. However, 58 of that, I think I have that number right, are invested in marketable equity and debt securities that we have full visibility of. So for the other ones, we do, and even for the ones that are unmarketable, we do obtain the audited financial statements, for those funds, look to see who the auditors were, look to ensure that they're recording their investments at fair value. Most of those funds are audited, as of 12/31, not 6/30. In the cases, most cases, we can actually get the underlyings as of 6/30. There are a few cases where we can't, and we look to see that the change in fair value from December to what you're recording at June appears to be reasonable. And we have, some procedures that we do during that time period. Also, we review internal controls in this area, so we do look at the process that management has in place for their due diligence of new alternative investment funds. And there were some new ones this year. I think previously they had 3 or 4, and there were up to 7 this year. So you did invest in that during the year. We also confirm purchases and sales and look at the valuation of purchases and sales. The purchases and sales, they are driven on your realized gains and losses. So, we look at that and ensure that what it's being purchased at, we can price test that, and what it's being sold at. We utilize a third-party pricing service for that as well, so we can recalculate your gains and losses.
If I could just pile on to this, although this was listed as an area of significant judgment and estimate, management is not developing these valuations. These valuations being provided by the fund managers, and in every case, management is doing enough due diligence to take responsibility and say, yes, we agree with those valuations, but management is not developing the numbers, which would require a lot more work on our side. And management, again, to the best of my belief, Shelley, management did not adjust any number as reported by a fund manager.
That's a good thing.
Okay, the last 3 or 4 pages I'm not going to cover at this meeting. This was the beginning of the thick management letter. So that concludes the overall presentation on our required communications. I'll take any questions on the financial statements if there are any. Otherwise, I can go and talk about the management letter.
Any questions on the financial statement?
Statements per se?
Or no?
Yes. Let me- Page 22, statement of cash flows. This is just an interpretation. I mean, I just want to make sure I'm understanding. When I look at cash equivalents at the beginning of the year, 740 million, and now at the end of the year, 633 million, I take away from that the impact of all the budget situations that we've been in has impacted our cash balances. Is that a fair takeaway, or am I missing something?
Terry, I think you're referring to, I don't know if it's page 22.
He's looking at the bottom of 22.
Oh, the bottom, I'm
It was
sorry,
just a
the bottom
timing
is 22.
difference, actually.
It's a timing
Yeah, it
difference.
was
Yeah, it's really more timing.
Yeah.
It's not that we're using any of that cash to cover budget deficits. It's really more the timing of when cash gets in and is recognized.
So then it's fair to say that from your perspective, the cash flow situation we experienced at the end of this audit was more or less the same as the beginning of the audit?
Yes. Yeah.
Thank you.
Timing issue that caused.
That's the only question on the statements I have.
Now, one of the things that's included in the whole financial reporting package, just to quickly summarize, the first 15 pages are management's discussion and analysis. This is something that is unique to GASB entities. FASB entities, at least nonprofit FASB entities, do not require this. And this really does provide a lot of good information on, what's happening at a summary level within the financial statements. Put a note there. So there are no other questions on the financials, then I'll move into the management letter. As I mentioned, there was one significant deficiency this year that related to the university's financial reporting process. This comment really has, I think, 2 different pieces to it. The first relates to the timing of the financial close process. And one of the things that we've been working with management, and as they get more involved in the PeopleSoft package, currently the close process occurs once a year. And they require all the entities to input information, I think, by August at some point, or mid-August. What happened this year was there was one entity, and it was, due to turnover, City College, that did not input their information in until perhaps October. What happens is the full picture of what the university is reporting on, including the MD&A analysis and the analysis of the accounts, cannot be completed until that process is complete at the component unit level. And one of the suggestions and recommendations is that, trying to get a full picture close, more frequently than once a year. And I know management has the intention of doing that for a mid-year close, and then hopefully, do a quarterly. If you do that, then at least you have some, 9 months worth of data that, you can analyze before the auditors are in, trying to do our audit. The second piece of this relates to the, blended component units that are included within CUNY's financial statements. Last year, if you remember, we did have 2 audit differences for errors that related at the component unit level that had to be corrected last year. And then there was one this year as well, not as significant in the past, but for CUCF. So The recommendation is for management to, develop a process or procedures to, do probably a more detailed review of what's happening at the component unit level, since they do roll up, into the financial results of the university. And also something that I've probably been working with management on for, seems like 5 or 10 years, is just information from DASNY. There's a lot of information that goes into these financial statements that comes from DASNY. A lot of capital, asset, debt-related information that, and we noticed, the $10 million error this year, that, management still does need to take ownership of and review. And so as part of this comment also, just a more, in-depth review of that information. And I know that management, was down probably 3 people during the course of our audit, so I think that's, one of the reasons why this hadn't been done as timely or as in-depth.
Are you recommending additional personnel for that
It's
function?
actually, since our audit started, they've hired 3 people,
Right.
so.
Let me just comment on both of them, but let me take the last one first, that we have brought on some additional staff that were missing before, especially senior staff that are both experienced accountants and CPAs, and so we think that the issues that Shelley is raising with regard to both the blended units and DASNY is something that we can handle now. In fact, our new Director of Financial Reporting is here, and that's Andy Wu behind us. And so we think that the staffing now to provide both supervision and direction will be able to address those concerns. On the issue of the closing, there was a problem, as Shelley indicated, with the one college. In fact, we wound up sending people down to that institution to help them at the year end. And we also recognize that even though we had the best of intentions of doing a mid-year closing last year, we just couldn't get to it because of staffing and other issues. So this year, we have informed the colleges that we'll be doing a mid-year closing. That takes place in the next 2 weeks. And we will be reporting back to both Associate Vice Chancellor Sapienza and Senior Vice Chancellor Shaw if we run into any difficulties with that, and ask them to intercede with any of the presidents if necessary. So we think that going to the mid-year closing will help us tremendously to avoid these problems. Once we move beyond the implementation of CUNY first, I think we can think about doing a quarterly closing, and I think also we can also want to do a monthly closing also. I think that would really be the way to go and to avoid some of these problems. But quite frankly, the issue for us is that we're working with multiple systems. We're working with CUNY first. We're working with our old legacy systems. The colleges are still working with those systems as well as their own shadow systems. And I think that until we can move toward a unified system, we'll concentrate right now on the mid-year closing. To the extent that we could do more, we'll do more as well.
The only thing I want to,
Excuse me, we have a quick question.
Mr. Kaufman, for the record, are you telling us that you're adequately staffed? I understand we're sitting here with several of the people to whom you report, but our job is to make sure that there are sufficient resources available to ensure that the statements are appropriately done. Are you have any concerns there, and do place to share them?
I appreciate that. We are adequately staffed, and I'm quite confident that we'll be able to avoid the issues with the 2011 audit that showed up on 2010.
one thing I want to add to Barry's comments is that we have spoken with the president of City College. She is aware of these issues, and we're working closely with the finance staff there to ensure that these things don't repeat for the current year.
I remain impressed that with all the multiple operations and multiple systems that are being used, turn out financial statements. It's a challenge.
Thank you.
Is that it for your report?
That was it. In light of, I'll turn this over to you, Lou, in a second. In light of, the new committee I guess, the first official audit subcommittee meeting. And I know, some materials that provided to Peter. Just wanted to have, I guess, Lou speak a little bit about, agenda items and audit committee focus areas that he's seeing in the higher education industry.
And we don't have a handout for this, right, Sheila?
Well, I did, but it's okay.
Probably better, Barry's probably sitting there saying, if we have a piece of paper, he'll talk forever. As Shelley mentioned, we did meet with Peter earlier this week and chatted about these kinds of things, audit committees. First comment I'll make, and I think it came up at the last meeting that I attended, is that even the structure as a subcommittee of the Fiscal Affairs Committee is a bit unusual, particularly for an institution of this size. In most cases, the audit committee is a freestanding committee and has its own stature, within the context of governance in the institution. But this is certainly a good step, without having the separate committee, having a separate meeting. And every other time I've been here, it's been as part of a fiscal affairs meeting with a whole host of folks with different interests. What we did today, in terms of Shelley going through the financial statements, talking about the management letter, I would call part of the core responsibilities of an audit committee. And I think one of the contrasts with a university as opposed to a public company is that there simply isn't as much time of an audit committee spent on that core responsibility. In fact, we have roundtables for public companies, and I think at one of those, one of the public company committee members stated that he thought that simple responsibility of oversight of the financial reporting process was enough to keep the committee fully engaged with the 5 or 6 meetings that they had a year. But those institutions have, quarterly reporting, earnings, a lot more issues to discuss. So what we find in colleges and universities, a couple of things that we see happening. One, again, for major universities of size, we see their committees meeting typically 4 times per year, meeting quarterly. But only one of those addressing the financial statements released at the end of the year, certainly involved, as you are and will be here, with the planning and scope of the audit and approving that in advance of the audit. The other major deliverable that has public exposure for CUNY and for most universities is the A133 audit. Shelley mentioned that will be discussed next, but that is the audit of federal funds that are provided to the university. That, again, is a very public document, even public in terms of your peer institutions who provide you funds. Most of that goes through the Research Foundation here, but institutions that you provide money to as well, this information is very public. For instance, the fact that you have a significant deficiency in your audit. Folks can find that out simply by looking at public data that is available from the federal government. They can be aware that you have a significant deficiency at the financial statement level. So I think the audit committee certainly has purview and interest in that report as well. So those are the financial reporting elements. Where we see committees spending significant other time in the agendas that they have, number one, I'd say, and I build this information based upon attending probably an average of 50 audit committee meetings a year for some 20, 25 different institutions. And so what I did in talking to my peers around the country as well is built a list of the top 10 agenda items outside of what I'll call the core responsibilities. Number 1 this year was enterprise risk management, and a clear number 1 in terms of agenda time and the number of universities that are addressing this issue. I think that one of the governance questions is it in fact an audit committee purview, all of the risks, or is it that the audit committee is concerned with the process? If a process gets started and is underway, the audit committee perhaps siphons out or delegates oversight responsibility over some of those risks maybe to other committees. But I think we've reached a point where there's acceptance, even in higher education, that ad hoc handling of risk, let's face it, management is managing risk. If you weren't, you wouldn't be surviving. Risk is being addressed, but it's very often in an ad hoc way, very often in silos. Something, one school might be doing it a certain way, different departments may be doing it differently. So I think the notion of enterprise-wide and thinking as an institution, what are our key risks that really challenge our strategy, that really could obstruct us achieving our goals? And that's the level at which governance wants to hear, what is management doing? So I'd say that's number one. Probably number two, and you might even argue that this comes close to core responsibility, is compliance. Broad compliance, but compliance with regulations generally. Again, because of CUNY's structure and the Research Foundation handling virtually all of the research dollars, that particular research compliance risk perhaps is sitting there more. But there are other compliance issues, and just the notion of compliance with laws and regulations is one that the committee wants to make sure that there are processes in place to, again, give the committee comfort that those are being handled properly. Outside of those, I'd say, and probably third, and I may not go through the full 10, maybe I'll stop here because I think the top three is international activities. We see a lot of institutions, one, just trying to get their arms around the extent of their international activities. For almost everybody, that certainly includes study abroad programs, but I've even seen conversation there at some schools of thinking about the risks that perhaps hadn't been focused on before. I attended one institutions, they have a risk council. And this was a couple of years ago when they were first starting this process. But in talking about study abroad, it became apparent pretty quickly that some of the safety issues that so concern us here, in terms of access to buildings, fire safety, sprinklers, et cetera, someone asked the question, do we know that all of our kids who are housed around the world or wherever our programs might be have those same safety elements? And there wasn't surety on that point, and people said we have to check back. So those kinds of issues, again, research and faculty, just where they might be operating internationally is another item that I think from a governance standpoint, you want to make sure that the risks associated with that are understood and controlled. I'll pause there because we don't know what the weather is doing outside.
Well, we're also running short on time, but we thank you for that. Chancellor and everyone else, trustees on the committee, let me just first of all thank the professional team and staff at KPMG. They have been very diligent and very helpful to me personally in trying to get up to speed. This is my first audit cycle that I will have completed as chair of the subcommittee. And it is my intention to meet with both the Chancellor and the Chairman, Chairman Schmidt of the Board of Trustees, and the Chair of the Fiscal Affairs Committee, Chairman Loda, to discuss exactly what you just mentioned, specifically the role going forward of the Audit Subcommittee, whether it will be a subcommittee or a committee or whatever. That's a question of a significant governance question, which is certainly to be decided by the people charged with those responsibilities that we will talk to. I asked for and have received, which I will circulate to the members of the committee, some literature on the role of audit committees in higher education, and I appreciate you compiling that on short notice, and thank you. With that, if there are no further questions or any questions, I'll just pause for a minute and see if there are. We'll call this meeting adjourned. Thank you.
Thank you.
Doing. So I'd say that's number one. Probably number two, and you might even argue that this comes close to core responsibility, is compliance. Broad compliance, but compliance with regulations generally. Again, because of CUNY's structure and the Research Foundation handling virtually all of the research dollars, that particular research compliance risk perhaps is sitting there more. But there are other compliance issues, and just the notion of compliance with laws and regulations is one that the committee wants to make sure that there are processes in place to, again, give the committee comfort that those are being handled properly. Outside of those, I'd say, and probably third, and I may not go through the full 10, maybe I'll stop here because I think the top three is international activities. We see a lot of institutions, one, just trying to get their arms around the extent of their international activities. For almost everybody, that certainly includes study abroad programs, but I've even seen conversation there at some schools of thinking about the risks that perhaps hadn't been focused on before. I attended one institutions, they have a risk council. And this was a couple of years ago when they were first starting this process, but in talking about study abroad, it became apparent pretty quickly that some of the safety issues that so concern us here, in terms of access to buildings, fire safety, sprinklers, et cetera, someone asked the question, do we know that all of our kids who are housed around the world or wherever our programs might be have those same safety elements? And there wasn't surety on that point, and people said we have to check back. So those kinds of issues, again, research and faculty, just where they might be operating internationally is another item that I think, from a governance standpoint, you want to make sure that the risks associated with that are understood and controlled. I'll pause there because we don't know what the weather is doing outside.
Well, we're also running short on time, but we thank you for that. Chancellor and everyone else, trustees on the committee, let me just first of all thank the professional team and staff at KPMG. They have been very diligent and very helpful to me personally in trying to get up to speed. This is my first audit cycle that I will have completed as chair of the subcommittee. And it is my intention to meet with both the Chancellor and the Chairman, Chairman Schmidt of the Board of Trustees, and the Chair of the Fiscal Affairs Committee, Chairman Loda, to discuss exactly what you just mentioned, specifically the role going forward of the Audit Subcommittee, whether it will be a subcommittee or a committee or whatever. That's a question of a significant governance question, which is certainly to be decided by the people charged with those responsibilities that we will talk to. I asked for and have received, which I will circulate to the members of the committee, some literature on the role of audit committees in higher education, and I appreciate you compiling that on short notice, and thank you. With that, if there are no further questions or any questions, I'll just pause for a minute and see if there are. We'll call this meeting adjourned. Thank you.
Thank you.